Refinance now. Why? Let's get into it. Hey everybody, Carol Ann Reed with The Real Deal, where we give you the confidence and the clarity that you need to make the right real estate decisions for you. If you like this kind of content and you want to see more, do me a favor and go down below and subscribe so you don't miss any of the new videos. So you're thinking about refinancing maybe? Well, and you want to know if now is a good time. It is, in my opinion. Why? Few reasons. Number one, rates are crazy low right now. They were low before coming into 2020, but once the spring came around and the pandemonium hit, the Feds actually lowered the rates even more to try to keep that economy going. And we're still kind of in the throes. It's still kind of uncertain. So the Fed has already said those rates are going to stay pretty low for a while. However, and this is another reason to do it now, those rates could tick up fairly soon. The market likes to react to good news as well. Good news means a stronger economy. And even the announcement just a couple weeks ago of a Russian vaccine that they tested on all of 76 people, the market ticked up because of that. And the rates went up just a little bit because of that. So when we finally do get a vaccine or we get more good economic news, the markets react to that. And if they react in a positive manner, those rates will go up. Also, home values are very, very high right now. They're at record highs. So what difference does that make? Well, it means that if your home value has gone up super high from when you bought it, you have more equity available to you. The more equity that you have, if you're going to do a cash out refi, the more money that you can cash out for home improvements or whatever the case may be. Also, the more equity that you have available, the better the chances that you're going to be able to ditch your either private mortgage insurance or mortgage protection insurance, depending on what kind of a mortgage you have now. You're going to be able to ditch that insurance premium that you've been paying, which for some people, that could be $100 or more a month right there. Then there is the adverse market fee. This is a new fee that the Federal Housing Finance Agency, FHFA, just announced that they are going to start tacking on to refinances only starting in December. So if it's a $300,000 refi loan, it's going to be an extra $1,500 line item on your closing cost statement. Or the bank is going to up your interest rate by 1/8 to 1/4%, somewhere in there to cover those costs. That's going to be coming. The banks are probably going to start putting those in mid-October, because it's not when you close, it's when the bank settles. So you're talking probably 45 days ahead of that December 1st deadline. The banks are going to start putting those fees in there to make sure that they are covered. If you want more information on the adverse marketing fee, go ahead and click on this link above to a video that I did just a little bit ago, which will give you some more information on that new fee. So what exactly can a refi do for you? Well, it depends on what rate you're sitting at right now. But just to give you an idea, if you are sitting on a $200,000 loan amount right now, and you're sitting at 4%. Your principal and interest, and I'm just using principal and interest numbers right now, your principal and interest right now is somewhere around $1,357. If you were to refi, take the same loan for the same $200,000, but at 3%, which is about what they are right now, you're looking at $1,245. So it's $100 difference. And it depends, you might be able to cash some out and still get the same payment that you had before. There's lots of things that you can do with it, but that's about what you're going to be looking at. So there are closing costs and things like that involved. So it's not for everyone. But if that makes sense for you and you're thinking of doing it, now is the time to do it. Are there any times that you wouldn't want to do it? Sure. So let's talk about those. But first, do me a favor, go down below and hit that like button. All right, so why wouldn't you want to do it? Well, there's a couple reasons. Let's just say that you are 25 years into a 30-year mortgage. You've paid most of it already. You've paid all that interest already. It's almost all principal left. The last thing you probably want to do is start over and pay all of that interest all over again. Now, it is possible to get a shorter term loan. I mean, go to like a 10-year, something like that, and it wouldn't be quite as bad. But think twice about that, because that's a lot of extra interest that you're going to pay over that extra 5 years. So, just keep that in mind. And also, if your interest rate is pretty low as it is, I mean, I'm sitting at 3.75%, I think, for my house, and that's pretty low. I am going to think about refinancing. I'm going to be doing my homework on this to make sure that it makes sense. For some people, it may not make sense. You may not be saving enough over the long haul to make it worth it. If you're already down to, let's just say you're down to 3.5 already. Well, if you're going to go from 3.5 down to 3.25, that's probably not going to make the savings, monthly savings that you get out of that is probably not going to make it worth the extra closing costs that you're going to pay, or the extra interest that you may pay if you stretch out the life of the loan. So if you are thinking about this refinance thing and you want to know where to start, well, step one is generally to figure out what is your home worth. If you know that, then you can go to the bank with some knowledge in your pocket. You'll know how much equity that you have, so that if you want to do a cash out, you know how much money that you can cash out. But it's a good place to start. You really need to know what your home is worth. So if you are interested and you don't know how to get that home valuation, this video right here will tell you where to go to get a good, solid home valuation. All right? Thanks, everybody, and I'll see you soon.